This is Travis Michelson, and today I have a special treat for you. I'm sitting here with Kim Rosenbach from Computech Financial, and Kim is somebody you're really going to want to hear from. She's an expert when it comes to taxes. As a matter of fact, she's an enrolled agent with the IRS, which is the top designation you can receive in her industry, and she specializes at working with small business owners, network marketers, as well as employees, and doing trust and all those things. So she's a great person to get to know. And today we're going to ask her some specific questions about changes to the tax code and how it affects both W-2 employees as well as business owners and network marketers. And then at the very end, I want you to watch all the way through, because I'm going to have a free gift for you at the end, so don't skip this. But I want to get started. So Kim, do you want to tell them anything else about your company?
We've been in business for 23 years, and we do specialize with small business owners. We also work with individuals and corporations, partnerships. I think you touched on that already. So,
okay.
I am an enrolled agent, so that means I am federally licensed, and I can work with taxpayers across the United States, so not just by the state.
So keep that in mind, no matter where you are. Her number is going to be underneath this video and her website, so you can get a hold of her for help regardless of where you are. And what I want to do today is I'm going to actually break this down into three kind of key categories. We're going to talk about W-2 employees, people who have normal jobs. We're going to talk about small business owners, and we're going to talk about network marketers. And some of the questions will apply to all of them. Now, Kim, we've talked a lot about taxes, especially with the political season just getting over, and the whole concept of the tax code being somewhat weighted towards the wealthy. And my understanding of the tax code is it's really not. It's weighted. There's two tax codes, one for W-2 wage earners and one for small business owners, and it just so happens that the business owners typically are the ones that create wealth, but it's not about the amount of money they make, it's about how it's actually distributed. Is that correct?
Right.
Okay.
Right.
So even if you're a W-2 employee, watch this, but we're going to talk about how you can get some benefits by being a business owner. So as far as W-2 employees, has there been any significant changes this year to the tax code that's going to affect them?
Not necessarily. We could get into deductions, but as far as just your earnings as a W-2 employee, the biggest thing that's changed this year is the Social Security withholding was at 4.2% for the employee portion, and it's back up to the old rate, which was 6.2%. So your paycheck will be a little smaller.
Yeah, and I actually saw that a lot on Facebook. A lot of people got caught off guard by that. They weren't aware it was coming down. Like, why is my check small?
Right,
so,
right.
But yeah, that was just a temporary tax holiday, so that did go back into effect. Another big thing with W-2 employees, though, and I don't know that everybody fully, and I don't even know that insurance agents fully understand the impact of the Affordable Care Act or Obamacare or whatever you want to phrase it as. But with this new obligation, companies with over 50 employees, for the most part, there are some that get exemptions, are required to carry insurance for their employees. But companies with fewer than 50 employees, or if they got a waiver, they're not required to do that. But the employee is still required to have insurance. So for a lot of you who may not have insurance right now, if you work for a small company, you're going to have to buy it on your own if the company doesn't already cover it. And a lot of that gets reported to the IRS. So what are some of the changes that they need to know about what the IRS has to do with the Affordable Care Act?
And that all starts next year.
Right.
So the date is 1/1/14 that starts. And basically the IRS is just going to be the agency that it's reported to. They are going to be taking in the penalties if you don't have the insurance, or penalties from the business side of it if you haven't provided the insurance and you're required to. It's called a penalty tax. So they've covered themselves on both sides.
Yeah. Depending on what the Supreme Court says.
Right.
Okay, so with the penalties that they're going to have to pay. Well, actually, we won't cover the penalties. The one question I did want to ask is, I don't know if we know exactly how this works yet, but I do know at certain income levels there's going to be a subsidy from the government that'll actually help people buy their insurance. Mm-hmm. For those that don't know, do we actually have an income breakdown at where those subsidies kick in 2014?
They based it on the poverty level, and it's quite a complex amount of numbers that they've taken it to. But basically they do have the thresholds that are in place. There's going to be some credits that are available on tax returns, so you might get a credit. You might get the penalty if you're not covered correctly, and then, like you said, we're not sure exactly how it's going to be handled for the subsidies, but they might be in form of an actual discount on the rate that you're paying. So you might, benefit from that in lifetime rather than having to wait for your taxes to be filed to get the credit.
Okay.
So we're waiting to see how that's all going to come down.
Right. Yeah, a lot of waiting right now.
Right.
So the takeaway is, even though this doesn't kick into January 2014, you want to start learning about it now. Talk to your insurance agents, make sure you're covered. You don't want to get to the end of the year and not be ready for it. So let's transfer over and talk about small business owners and network marketers for a minute. And especially in the network marketing field, one of the things a lot of companies actually tout as a benefit to joining network marketing is the fact that you get tax benefits. But one thing they don't cover as much as they probably should is that the IRS has this little regulation with it that you have to show intent to make a profit.
Right.
Otherwise, the IRS can deem it as a hobby and not give you the tax benefits. So what do they need to do? How does the IRS determine or define intent to make a profit?
Well, one of the thresholds that they look at is how many years you've been in business and how many years you've actually made a profit, and it's a 5-year window they look at. Generally speaking, it's 3 out of the 5 years you would have to make a profit, or you could be at risk of being deemed a hobby. The other things that I've seen in audits representing taxpayers at is, are you running this as a legitimate business? One of the great things to do is open a bank account with the business activity only happening in and out. Also keeping a set of books. QuickBooks is generally what we would recommend. It's fairly easy to purchase and buy and run. And you're running it as a business. You're taking precautions and steps to keep track of the income, keep track of the expenses in a program that's completely separate from your personal life. That's a really great way, to keep that safe as far as being deemed a business. Having maybe a business plan on paper. I don't know if some of the marketing groups might even provide those types of things to the members, but having some actual formation on paper to say this is what your plan is, this is how you're going to do this, and this is where you're running with it.
Okay. Is it also beneficial to keep like a daily schedule of the time you actually spent in the business and log all of that so you can prove the actual work you did?
Yeah. Anything that you can have on paper to back yourself up is really great. Yeah.
Okay. And one question that might go along with that, and both for small business owners, like I also own a carpet and tile cleaning company. Most people know that are watching this, as well as I'm in network marketing. And there's a lot of different ways you can format a company. You can just put on your personal name and only have a trade name registered with the state. You can do LLCs, S Corps, C Corps, and probably some corps I don't even know about. What is the best way to determine what is the right business entity for you, and for small businesses, and do network marketers even need to care about that?
Well, the LLC is very popular right now because it's probably the easiest type of an entity to form, and it gives you that layer of protection from liability. With the LLC, you have some determining choices as far as taxes go. You can elect to be taxed as a sole proprietor, which is just a single member LLC, the default. You can elect to be taxed as an S Corp or a C Corp or a partnership if it's more than one member in the LLC. My rule of thumb for my clients is really do what you're most comfortable with. If it's too much headache and hassle to have to worry about payroll for yourself, you're probably not going to want to elect to be taxed as a corporation, because that is one of the requirements. If you're really, that doesn't scare you and you're willing to put in the time and the effort, if you have enough profit, it might make sense to be an S Corp. So first rule of thumb for my clients is always do what you're most comfortable with, and then go from there. And having some professional to work with is always good, because they can alleviate some of that paperwork or the questions as far as what your requirements would be. So.
Okay. And just for the network marketers, would you recommend at least like a pass-through LLC just so they can have it in a business form, or is it just doing it under their name good enough?
I think initially starting out, there's no real reason to get that, that technical as far as having an LLC, but some people just really want to stay away from the liability risk. And I mean, anybody can sue anybody for anything, so it doesn't mean you're untouchable, but it does give you that layer of protection to keep it a little bit separate from them coming directly to you upon the first problem that they would have with you, I guess.
Okay. And back to the actual tax benefits to owning a small business or network marketing. We talked about there's a lot of things you can deduct that a W-2 employee can't deduct. Mm-hmm. Can you just name a few of them, then we'll go into detail on how to do that with a few of them?
Yeah, when you're a business for yourself, mileage is probably one of the biggest things you want to track. It's a great deduction. It's something that you're doing anyway if you're having to drive to get clients or drive to meetings or that type of thing. So keeping a mileage log is really important for that deduction in the eyes of the IRS. but it is something that an employee doesn't get the benefit of, at least driving to and from work, the commuting miles. The other thing to keep in mind is any expenses that are business related are gonna be directly deductible from your profit as an expense. Whereas an employee, there's a 2% threshold that you have to exceed before any of those business expenses would become deductible as an employee. So office supplies, like I mentioned, getting QuickBooks, any computer software, if you're printing business cards, letterhead, those types of things, if you have any type of insurance that you would cover for your own protection. I did mention mileage, so the mileage expenses or the actual expenses on your vehicle, the business portion of your home office, if you have that, if that applies. Those are some things right off the top of my head.
Okay, and we're going to talk about a couple of those more specifically. And I was asked I put this out on Facebook and asked what kind of questions do you want to hear, and I did get a couple questions from people wanting specific answers. So this is one of them. When it comes to business meals, you typically deduct, I think, 50% of the meal if it's for a business purpose. What do you need to do to track that? Do you just need the business receipt? Some people think you need to write the name of the person you met with and what you talked about on the back of the receipt. How detailed do you need to get for that to be legitimate?
Well, in an audit, and that's always how I like to prepare my taxes, is through the eyes of an auditor. They want to see the receipt, they want to see the person's name that you met with, and if you have an intent, business intent, quickly jot a note. Those are the easiest audits for me to represent if someone's taken the time to do that. And they do want a name and the date, and what was discussed in an audit. So if you already do the work on your receipt, that's the best thing.
But they're not necessarily going to call that person and verify you took them to lunch or anything?
No, I mean, unless they thought there was a reason that, if it was the same person over and over and over again, they might.
Right. Well, that actually brings me to the next question. For it to be deemed a business lunch, can you go out to lunch once a week with a business partner just to discuss business growth strategies? Because that would be the same person week after week. Is that still considered a legitimate meal deduction, or?
Yeah, and again, I would make a note maybe on the receipt of what you guys were talking about, advertising on Google or, something specific that topic was, just so you have that fresh in your mind if you had to produce the proof would be a good idea.
Okay, all right, great. Now this one's kind of a different question. It's something that I was asked, and this applies mainly to network marketers. And one of the strategies a lot of people have been told is if you have a job and you travel back and forth to your job, that mileage is not tax deductible. And a lot of people have been advised if while at work you schedule a meeting during your lunch break at a restaurant across the street and you meet with somebody about your business and have lunch, and it's a legitimate business lunch, that you can then deduct the miles back and forth to work because you're actually making that drive for the lunch as well. Is that a good strategy or a risky strategy?
That's risky. The reason is again, through the eyes of an auditor, what they're going to ask is what was the intent that day. And if the intent was to go to your W-2 job, and as a side note, you went to lunch across the street, you probably would get to deduct the miles across the street if you drove.
Okay.
But to say that whole trip, the intent was for that one lunch is a risk.
Okay.
I would recommend maybe meeting for breakfast and making that your first stop, because then that intent was to go meet that person for breakfast rather than I'm already at work and I just went across the street for lunch. You're pushing the envelope a little bit to try to do it that way, honestly.
Oh, that's good for people to know. So, and then about the home office deduction, which we've talked about a little bit, there's been some changes to it this year. It used to be you itemize your home office deduction by expenses and total square footage of your office space, and they made some changes this year. Can you explain the changes and whether or not they're better?
Well, they're easier, which is surprising.
Okay.
The IRS usually doesn't streamline things like this without even an argument. I didn't even hear this was coming down, so we were kind of surprised. But yes, starting January 1st of this year, 2013, you now can deduct a flat dollar amount per square foot for your home office, and they've deemed that $5 per square foot up to a maximum of $1,500 for the home office deduction. Whether it's better or worse would probably depend on your overall expenses. I think they probably just took an average. So if you lived in a fairly expensive home, as far as utility costs and things, your percentage might be higher than somebody who obviously doesn't. So it would depend on what you've been deducting to see if it is gonna be better or worse for you, but it's certainly easier.
So you have the option to do both, whichever one gives you the biggest benefit.
You know what, I haven't heard if it's an either or
Okay.
if this is just the way that
new
they're
way to
gonna
do
do
it.
it,
Okay.
yeah, that's a good question though.
Alright, so that's one we'll learn later.
Always learning.
That's right. So a question I have on the same token is does your garage count? Like I have a carpet cleaning business and I park my van in a garage, I have all my chemicals stored in the garage, all my equipment, so do I get to claim that portion of the garage as a business use?
Yeah, as long as there's business use, yeah. In
Okay.
a storage shed, if you stored your supplies in that, or you paid for storage off premises also, but yeah. Look at that just as you're basically using that just for your business, then yes.
Okay, perfect. And let's see, what's the next question? What about expenses that would have both a personal and a business use? Like if somebody doesn't have a business and they have a cell phone, that's non-deductible, but all of a sudden if they start a business, they throw that number on their business card, they're starting to use it for business, but they also use it for personal use. How do you determine, is it all of it deductible, a portion of it, or how do you determine that?
They've been very strict as far as cell phone use in the past, and they have lightened up a little bit on that in the recent year or two. But still, you need to show the business, the business intent with that. So my rule of thumb with my clients is how much is business use? Give me a percentage. Are you on the phone 8 hours a day, but then, you talk to the kids or text or whatever, another hour out of a day. I would back out a certain percentage for personal if you definitely are using it for personal, just to be on the safe side. And then it shows that you're not overstepping as far as taking the deduction. But if it's just, if that is your business phone and that's all you use it for, then certainly 100% would be legitimate.
Would it be beneficial, you already mentioned that you should set up a separate account for your business. Should you pay for your cell phone bill out of your business account to try to establish business use?
Yeah, it's always a good idea to, whatever is business related, to go ahead and pay those out of the business account. If you are, paying it 100%, but you have some personal use of that, it might be good to reimburse, $20 a month or something. And those types of audits that I've had, that someone is doing something, that those extra steps really do pay off, because it shows the auditor, okay, you're not trying to, pull a fast one. And if you're upfront with that and doing that on your own, then it actually even makes the audit go better.
Okay, awesome. So this one's more specifically for network marketers. Now, most network marketing companies have some type of monthly requirement for that the member purchase from the company to qualify them for the compensation plan. And sometimes that's for personal use, sometimes it's for sampling. But a lot of people are told that because it's required to be part of the compensation plan, it's tax deductible even if it's for personal use. Is that true, or can it only be deducted if they're actually using it to give samples to prospects to build the business?
It's another risky area, because yes, it's required. So you could look at it that way, but technically, even on the Schedule C, which is the business form for a sole proprietor that they would use on their taxes, there's a line right there that says subtract the amount for personal use. So again, you'd want to be careful with not overstepping that, because honestly, if you're ingesting it yourself personally, you are getting a benefit, and that's really what the IRS looks at, is not being deductible for a business, is what are you personally benefiting from.
There you go.
So,
all right,
yeah.
Perfect. Hey, good stuff to know here. Some people might be doing this wrong.
Yeah.
Let's see, what's the next question? Does the Affordable Care Act impact small business owners different than W-2 employees, or is there any way as a business owner that we can actually deduct having to buy our own health insurance coming up in the next 12 months?
There are. Again, it depends on the entity selection. And I won't go into all of that, but that's the biggest part right there. There are some programs available that you can actually incorporate your medical expenses, your health insurance, that maybe wouldn't be deductible as a business expense. But if you go through, basically it's a Section 125 or Section 105 plan, it would deem it as an employee benefit. So it's a way that you can structure your business to be able to pull those medical expenses and health insurance expenses in as a business expense. That gets a little complicated, so I won't go there. But certainly if you are a corporation already, it is deductible, so that would be something that you could deduct. As far as a self-employed person, again, some strategies that you'd wanna utilize to use that as a business expense, but maybe not just on the front end, as your personal health insurance would be deductible as self-employed health insurance. So it's kind of a backdoor into being able to deduct it, but not directly as a business expense. If I've answered your question.
Yeah, no, I think so.
Complicated, but
Yeah,
yeah.
Yeah, but that gives us a good starting
Mm-hmm.
point. So those are just some of the general tax questions that I was asked by people on Facebook. Is there any other things that as a professional people should know that they may not even know to ask, that they could benefit from having their own business?
Again, we've touched on it already, but just being sure to keep receipts, being sure to document where you're going. We're seeing a lot of notices come out from the IRS on small business expenses that mileage is a big one. They want a mileage log. They don't want just, you to add up the total miles and give it to, put it on your tax return. You need to be able to prove those miles and what they were for. We are seeing audits on the rise. The IRS is wanting to collect money because of the debt that we're in and the recession and all of that. So the way they're going about it is through collections and through audits. So just being sure that you have your records in order, and again, whatever's claimed on your tax return, you can justify and you can back it up with actual proof is more important now than ever.
Well, and that just spurred one more quick question for me. And the mileage log, if you're using your vehicle for both personal and business use, do you need to have a log of all your personal, or do you just need to have the log saying, I did this for business and the miles were from here to here? Or do you need to track all your miles, personal and business?
Yes and yes.
Yes and yes. So you write every mile down.
Yeah, basically the best way to go is to track the business miles. But it's always a good idea if you can prove the odometer reading at the beginning and end of the year, because that'll show how many total miles were put on the car.
Okay.
And that's, if you have 28,000 business miles a year, that's pretty high.
Right.
So if your car only
Unless you're a
has
realtor.
15,000, yeah, but if your car only has 15,000 miles on it, how did you drive 28,000 miles?
Okay.
So showing the proof of what is actually put on the vehicle for the year is important, as well as then showing what the business intent was for the miles that you're claiming as business miles.
All right, great. Well, like I said, if you need some advice from Kim, her phone number, her website's going to be at the bottom of this video, right underneath it. If you're not watching this video on the blog, if you're seeing it on YouTube, go over to my blog. There's a link below the video, and then you can get all the information about that. So I thank you guys for watching, and hang out for the free gift. I'm going to talk about that in just a second. Talk to you soon.